Hey everyone, welcome back to another weekly market outlook. This is for the 28th of November to the 2nd of December. So, can't believe it, we are pretty much at the end of 2022. What is Vito and Henjoto? Let's recap what's been a pretty weird week last week. Alright, so we got the RBNZ hiking rates by 75 basis points. We've got data coming up from the EU, the Eurozone, the US, and the UK. All flash services and manufacturing PMI, all of them are actually below 50. So this is quite a sign of a contracting economy. And then we have pretty much the meat of the week. Last week we've got the FOMC meeting minutes that confirms a less hawkish FOMC. These are actually the summary of the minutes. So FOMC will continue to hike rates with an increased target range. That's probably why we didn't want to use the word dovish here. We'll likely slow the pace of interest rate hikes to avoid over tightening. We'll take into account economic growth and are willing to adjust monetary policy to accommodate such concerns. We'll also continue monitoring inflation risk and adjusting monetary policy accordingly, leaning towards slowing the pace of interest rate hikes with over-tightening as a concern that could actually impede economic growth and potential instability in the financial systems. So it is slightly less hawkish, but refraining from adjusting the language to turn it dovish. That's the reason why I actually put out less hawkish. I didn't want to call this dovish at all because we still see FOMC continuing to hike rates, probably at a lower pace, but with an increased target range. Okay, so that's what's been going on last week. So a little bit of a sell-off in the US dollar, but not by a huge margin, considering that last week was basically the start of the holiday season. We've got the Thanksgiving in the US, so pretty quiet market last week. All right, so this week, key fundamentals to cover this week. We've got the Eurozone preliminary inflation rate. We've got the US ADP NFP, EU unemployment rate, US PCE, personal consumption expenditure or personal spending this week. We've got the ISM manufacturing PMI numbers for the US, and then we've got the US NFP. That's going to be wrapped up with the US and Canadian unemployment rate this week. All right, so Monday, nothing major. We've just got the Australian retail sales number, but again, really impacted on the Australian dollar, but it does come in a little bit lower. The Australian retail sales number for last month was expected to drop down a little bit, just 0.1% from 0.6 to 0.5%. We saw a drop to negative 0.2%. So that really impacted the market. That's on Monday. Other than that, high impact news. We're just going to filter out the high impact news from now on. So we've got Tuesday, we've got the Germany preliminary inflation rate year on year. The consensus was for a drop to 10.3% from the previous 10.4%. We've got the Canadian GDP, quarterly GDP numbers. Again, consensus is for a little bit of a drop to 1.5%. Right? On Wednesday, we've got France, Italian, and the Eurozone inflation rate, preliminary inflation numbers. For the Eurozone, I think that's going to be the main focus. The previous number was 10.6%. We are expecting a little bit of a drop here to 10.4% for the Eurozone inflation numbers. And then we've got the ADP unemployment numbers. We got the ADP NFP numbers. Again, consensus, slight gain to 200,000. Previous one was 239,000. Again, not really a huge impact considering how everyone's just going to be focused on the NFP numbers. Do keep in mind, Fed Chair Jay Powell is scheduled to speak on Wednesday. All times are at UTC 00, GMT 00. All right, on Thursday, we've got the European unemployment rate. This is going to be the main focus, unchanged for now. Expected to be remaining the same at 6.6%. Personal income expenditure or PCE for the US expected to rise a little bit. US ISM manufacturing numbers expected to take that drop below 50. So, I guess this would be for the first time. So we'll see what happens there on Thursday. But to wrap up the week, we have the Friday numbers, NFP numbers again. Expected to still gain at 200,000 here. The unemployment rate expected to remain stable at 3.7%. Okay, jumping on to technicals, we have the dollar index. Previous outlook that we had, we were looking for a little bit of a pullback towards 108 in terms of resistance, which was the previous support pretty much in August and September for the dollar index. We now have tested those support as resistance at 108. We do have support right now building up at 105. So we'll see what happens here with the dollar index right now in terms of pressure and the momentum. It does still point to the downside. Overall, this one here requires a break below 105 to see further drop to the downside. Below 105, we have a little bit of support coming in at 103.50, but ultimately we are potentially looking at a potential return towards 101 for the dollar index here. In terms of 10-year treasury yield, let's take a look at 10-year treasury yield. This one here is still within the Ichimoku cloud, not really moving out by much. We do still have the support at 3.5%. Momentum remains below 20, so we should be looking for a little bit more of a push lower, maybe towards that 3.5% support on the 10-year treasury yield. Okay. Let's quickly move on to the Australian dollar USD. So this is the Aussie USD. In terms of some of the outlooks that we take a look at throughout the webinars last week, we did see price getting rejected at 127.2%, which is at 67.70. So let's get rid of this one here and focus a little bit more on the daily here. So right now, price is actually moving back towards that 23.6% Fibonacci retracement here, which is at around 66.75. We do see the market gaps down a little bit, and we see a little bit of a negative push on the Australian dollar. This is on the back of the negative retail sales numbers from Australia. In terms of momentum here, we do expect market to be a little bit more choppy here. In terms of price movement, we are looking at, key support levels being tested right now, which is 66.75 to 66 cents on the Australian dollar USD. Just a momentum, it is still hovering above that 80 level, so we might see price maintain that position above the Ichimoku cloud. We might see price actually potentially push back up above 67. If it does push back up above 67 cents, then we do expect that resistance to remain at 68 cents for the Australian dollar. We expect a little bit more of a choppy market condition for the Australian dollar here. Moving on next would be on to the Euro USD. Again, taking a look at the Euro USD, we are still way above that 1.0250 support level, 1.01 support level range. We did see that bounce off 1.0250, but we haven't actually posted a new high on that back of the last hawkish FOMC. We see a little bit of a gain, but we don't have enough momentum to break that 1.05 key resistance on the Euro USD. So for the Euro USD, we do expect a little bit more of a range-bound market condition. We still have that resistance at 1.04, 1.0450. In terms of the pivot for this week, it will be at 1.0350. In terms of key support, will remain at 1.0250 to 1.02. Again, expecting more of a range-bound market condition. For the uptrend to resume on the Euro USD, we actually need to have a confirmed daily close above 1.05 at this point in time. Until then, price is expected to range bound between 1.0250 to 1.0450. If it does break below 1.02, then we do expect that pullback down towards 1.01. Again, expecting a more of a range bound market condition. It is a 200 pip range for the week, so intraday traders should be able to find opportunities to trade this range this week. For the pound USD here, one thing to note here, and you guys are probably wondering why I'm still keeping this Fibonacci here. So taking a look at the pound USD, this Fibonacci was taken since 2 weeks ago, but we actually don't have a break below that 23.6%. So this should be extended a little bit higher. So we are expecting support to come in at 1.19 at this point in time. We have broken key resistances on the pound USD. Price is actually trading pretty much at about 1.2050. Which was kind of the cap on the pound USD. We are breaking that level, so we do expect a little bit of again, taking a look at the momentum wise, it does indicate we might see further run to the upside, but for that to happen, we might see a little bit more of a sideways movement for the pound USD here. So let me get that right. So for the pound USD, at this point in time, we do expect price to potentially test 1.19 and then retest 1.2 again. We'll see if that 1.2 level actually holds strong for the pound USD. But in either case, we definitely need to see a break even higher at this point in time. It would actually be a break above 1.2150. So for this week, these are going to be the key levels to watch out for. expecting more of a little bit of a range bound market condition between 1.2, 1.2150. Ultimately, we do expect potential retest of 1.19 as a support, so you might want to include 1.19 there as potential support for the pound USD. But looking at how the market is, considering how we are transitioning from November to December, we just started the holiday seasons pretty much, so expect a little bit of a quiet market this week again. Range bound condition, that's going to be the view throughout the whole week, and then we can identify our key levels at this point in time. If we have a break above 1.2150, then we likely know that the trend is likely going to continue to the upside. If we do break below 1.19 on the daily, then we are expecting more of a pullback on the pound USD. But until those range breaks, so we are looking at this range here right now, until this range breaks, we're not really expecting the pound to be trading or anything like that at this point in time. So expect more for range bound market condition. Know your range. If you can trade within the range, that's going to be great. But if we take a look from the daily, we are looking at a little bit of a slowdown here, just to ease off a little bit on the momentum. We're not technically overbought yet on the pound USD, so overall, this one could still continue to push higher on the pound USD, potentially towards that 1.23 level. But just to focus on this week, we are going to be looking at a range between 1.2150 to 1.9 with a key pivot at 1.2, key psychological level for the pound USD. All right, for the dollar yen. So we have several interesting developments here for the dollar yen. We have seen price actually get pushed out of the Ichimoku cloud. So we actually see a little bit of transition here. In terms of confirmation for the dollar Japanese yen, can we confirm that this one here has actually broken key support level that was established since May? Yes, the support level was broken, but we're still going to leave that support level in there for now. We are also below the Ichimoku cloud. So we could be looking at early indications of a potential trend transition on the dollar Japanese yen. Right now, we don't need this. This was the previous predictions in terms of when it could actually transition off the Ichimoku cloud. So we want to focus a little bit here on the dollar yen. So let me zoom in a little bit. So we know the current price is that we have a little bit of an artificial cap around 143. But in terms of key resistances, it's going to creep in at around 142. So we will focus on 142 and 143 as your key support. Not expecting this week intra-week support, but those are still going to be resistances for the dollar Japanese yen. In terms of support, we do have one key level, that's 138. So if there's actually a daily close below 138, that's going to trigger further losses to the downside, likely triggering a potential move towards 136, 135 on the dollar Japanese yen. So this hinges a little bit on a potential breakout. Is it going to break to the downside or is it going to be to the upside? So at this point in time, if it does bounces up and price closes back up above 140, then we could potentially see that move back towards 141, 141.50. But right now, I want to focus a little bit more on the 138, because if there's a confirmed daily close below 138, then we could see the dollar yen slides even lower. Okay. So intra-week range for the dollar Japanese yen, the first thing to watch out for is definitely 140, right? So right now, 138 and 140, that's going to be your range for the week. This is going to be your established range for the week. If we take a look at the current movement, then we do expect 139 to be the pivot. So if price breaks above 140, then we could potentially traverse higher towards 141, 142, and back towards 143. And that's still going to be okay. That's still going to be below the Ichimoku cloud. But if we do have a confirmed daily close below 138, that's going to trigger further selling on the dollar Japanese yen. So keep that in mind if you're trading the dollar Japanese yen. So pretty much just to quickly recap everything for the four major currency pairs here, we are expecting a little bit more of a range-bound market condition. I think this is going to be a great week for swing traders to start positioning their trades for a potential breakout. Intraday traders, if you are trading within the week, then we have established a little bit of a range for you to trade with in terms of key support and key resistances. All right. Other than that, I'll see you soon.